All right. Welcome to Technically Trading with Robert Roy. I hope you're having a fantastic day, everybody. I hope it's been a good trading day for you. It certainly has been an interesting one the last couple of days. That is for sure. If you've been watching, and let me go over and start jumping right in the S&P chart, guys, because this is where it's all at. I mean, this is the meat and potatoes here of everything. And I mean, everything is from here. When we look at the overall pattern of what's taken place in the market here. Let me grab a pen. Let's try that one more time. Okay. No, I don't know why it's not grabbing that drawing tool. Let me try that again. All right. I don't know. It's not letting me on that other screen. That's what it is. Okay. Well, not sure why that's doing that. All right. Anyway, no pen today. So if you look from down here, guys, where the 67.89 is, we've got this phenomenal move up, pull back, slightly lower low. We get this move up, slightly lower high. We get this move down, slightly lower low. Are you seeing a theme? Okay. And we get this bounce in here yesterday. Great gap yesterday in there. Phenomenal run. Took us back into what is called a bullish bias. We're going to talk about bias a little bit today, but takes us back or took us back into a bullish bias. And then today we're right back down and we filled the old gap from yesterday. And the funny thing about it, the ironic part is, look at it. We get a day up, a day down, a day up, another day up. Okay, we had a skip in there and a big day down. But if you look at our bearish days, they're big. This is not the bears just playing around a little bit. The bears have a lot of chutzpah. The strength is there. I don't care what the reasons are from an economy standpoint or from a news announcement standpoint. That doesn't necessarily give the bears all of that power, but that power is there regularly. And we're moving within that range, that channel. We're moving in that on a regular basis, a consistent basis in there. And it's not, it's a wide channel, but it's not a flat channel. We've got lower highs. We got a high, a lower high. And then with yesterday now, we have a lower high. So let's draw that in because that's a swing high for us right there. Right? That's a swing high. And with the bottoms, we had a low, a lower low, and then a lower low. So right now, our trading decisions has to matter between those two series of tops and bottoms. Consider them horizontal. Don't worry about those slightly lower or slightly higher levels. They're close enough to being sideways. You can get horizontal lines in there. If you just came off that low here, you could see where it would give you a bottom. If you came off of this top in here, you could see you got this top, this top, this top. It's almost a head and shoulders pattern as well inside of there. We're not breaking the neckline. That's just it. We're not coming down below that neckline. We're not breaking it. Inside of there. So we'll see how it pans out. But right now, yesterday's move took us from what would have been what I would call a bullish, or rather yesterday, we would have been in a neutral bias 2 days ago. Neutral bias. Yesterday, we are bullish. And today, right where we are now, we're back in neutral all over again. So what does that mean from a directional standpoint? We don't have it. We did yesterday, we were bullish, but then those traders that went out there and decided, okay, I'm going to buy long and go get some call options for next month, 3 months out from now, whatever it is. And then we gap down today and swift move to the downside. If we look at a shorter term chart, we look at a 5-minute. Let's bring that in a little bit. Let's zoom in on it. Right. We opened up and fast, boom, 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 boom. And then once we got until 10:15, 1, 2, 3, 4, 5 candles later, we moved from 69.16 down to a low of 68.60. So 70 points or so in that 5 or 6 candle move. So rapid move to the downside there. And then a little bit of bounce, which was great and fine and good. A little bit of bounce in there. I love that. But when you look at today, there's just a lot of weakness in there, a whole lot of weakness. The strength has all been bearish. And again, the easy way to do this is go to a shorter time frame. So you've got some decisions to make when it comes to time frame. You're going to need a primary time frame that you do your analysis off of. You're going to need a primary time frame that you take your trade off of. And then to me, you need a tweak time frame as well. So what does that look like? For me, my charts are set up on my charting platform as 4 templates, 4 charts on my template. The one in the upper left-hand corner is a 1-minute chart. The one in the upper right-hand corner is a 5-minute chart. Bottom left corner is a 30-minute chart, and the bottom right corner is a daily. For me, my primary chart of when am I making my decision is a daily chart. If I'm looking at Amazon or Google or Ford or Booking or whomever it is, I'm going to look at a daily chart and say, I like that pattern, bullish or bearish. And we'll talk bias in a moment, so you'll get an understanding of how we decide that. From that daily chart, now when the market opens today, I back up to a 5-minute, and 5-minute is my primary decision maker. I look at that 5-minute chart to confirm what's going on the daily. So if I'm bullish on the daily chart, I'm looking for bullish trades on the 5-minute chart. And then once I see that 5-minute is starting to set up, I use the 1-minute as the tweak. That's kind of the finesse time frame. I don't want to trade off of a 1-minute. It's too short for me. Doesn't mean it is for you. It's just too short for me. My 30-minute chart is more of a me too. The daily's going up, the 30 minutes going up, the 5's going up, and the 1 is setting in perfectly, also going up. That 30-minute is just a me too indicator. It gives me one last confirmation that what I'm looking at as my primaries is all working out perfectly. And then my trade is taken from there. And you can see with all of these dark candles today, this is what I call a bearish thrusting pattern. When you see that type of a move there, it's a bearish thrust. But this is a strong bearish thrusting pattern. If we had a bunch of white candles in between, hollow candles, sparsed all throughout there, black, white, black, white, black, white, 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 black, black, black. If you had a real mess in there, then that would be a dirty thrusting pattern. Clean thrusting patterns like this, there's serious direction behind it. And you've got to be hard pressed to go against the overall direction here as this is happening, because the momentum is extremely strong right now as we're seeing that move to the downside. So if we go back to our daily chart, what are we looking at then, right? Well, right now, if I close where we are, if this is our closing price for the day and we were done, we're in a neutral bias right now. What does that tell me? Nothing. I got nothing going on. I'm not bullish. I'm not bearish. I'm very I don't know-ish. I don't have a direction right now. And we need to find that direction, right? So what has to happen? Well, we're going to break down through the lowest moving average, put me in a bearish bias. We're going to break above the highest moving average, put me in a bullish bias. And I'm okay with either one. I would rather have the bullish. I'm still fighting for that bull, trying to get that upside. But there are some key levels on here that you've got to manage or watch. And if we break those key levels, whoo, that's where my concern steps in. And you'll understand those before we leave here today. Okay. I want to explain a little bit about what bias is and how bias works. Bias is a representation for me of 3 moving averages. It is, and you can jot these down, and I'll show you them by color on my screen. There is an 8 moving average, which is pink. You see my mouse is up here. There's a green moving average, which is 21, and the brown moving average is 55. Now, yes, there's also a 5 up there if you're reading that top one, but that is for one very specific trade setup that I use for one exit only, and that's only on swing trades, which right now is almost non-existent. I think we did one swing trade this year, recently did it, and it's going against us today for sure. There's no question. We're in the trade for 2 days. It definitely is against us. There's no question about it. It's the first swing trade we've done for the whole year. We dipped our toe in the water, didn't work. Too cold, go find somewhere else to play. Right? So when those moving averages are in the right order, what does that mean, the right order? If the smallest moving average, which is the 8, the green is on top, the pink is in the middle, and the brown is on the bottom, the moving averages are in the right order, but what's the relationship to price? If price closed like it did right here on this day, above the 8, actually it's the 21, the 8 is the pink. So let's see, let's go here, okay? On this day, we closed bullish. We've got the 8, the 21, the 55. That is considered a bullish bias. And not only is it bullish, it's considered a true bullish bias, right? True being all the moving averages are in the right order. If the moving averages are messed up, like we were here yesterday, we're still in a bullish bias, But on the day when we have a true bullish bias, let's say that you normally do $1,000 is what you put into your trade. 2 contracts, 8 contracts, whatever that number comes out to be, you're going to put $1,000 in the trade. And that would be on a day we have a true bullish bias. On the day we have a bullish bias that's not true, like yesterday, I'm going to put maybe $400 into that trade. It's what I call an aggressive entry. I still want to partake. I want to participate, but I'm not putting a lot of money into it. I'm not willing to risk a lot on this trade. So that would cause me to say I'm going to do it in this aggressive trade with a little bit less in the trade. If we closed down here, the moving averages, we're in a bearish bias. If we closed in that bearish bias, that's great. Is it a true bearish bias? The answer is absolutely not. True bearish would be 8 on the bottom. So 8 here, 21 above that, and then 55 above that. That makes it true. Well, we're kind of messed up. The 8's below the 21, so that's good. I like that it's at least crossed over. If I were going to take a bearish trade on the next day on this, I would do the same thing as an aggressive entry. Only when I have a true bullish bias or a true bearish bias would I take a full allotment or contract size on my trade. Now, if we related this right now, we're getting close to bearish bias. Market's still open, right? It's only about 12:40 in the afternoon. So we got a couple hours left, but we're getting close to being bearish where we are down below our 55 moving average, our lowest one, whatever it is, it's the lowest one. So I'm basically looking for bearish setups. Now, assume we closed bearish on the S&P 500, right? And let's pretend the market's closed right now. Let's go through a couple of stocks, right? We are in a bearish bias right now on Adobe. I love it, right? It's just below the moving averages. Are they in the right order? Yes. 8 is on the bottom, 21 is above, 55 above that. Pink, green, brown. They're all in the right order. Now, just if you're looking at this going, but Rob, time out. I don't use those levels. What do you use? 10 and 20 and 50? That's fine. Same thing, right? Why am mine different than yours? You can use any settings you choose. Mine are used because I have done 4.5 million days of back testing and found the best moving average crosses come on an 8 and 21 moving average primary lines. So that's why I use the ones I do. They're Fibonacci levels. But if you're using a 10 and 20, you will hardly notice the difference between the two. I'm a harmonic trader. I trade with nature. I want everything in tune as possible. So I will use Fibonacci numbers, levels, units, wherever it is possible for me to do so. So if we close right here, now there's another factor in play. Look at where the moving average is in relation to the Fibonacci level. And that's what these are. These are all fib lines. Every one of these, each line here, with the exception of this blue box and that dash line, but every line that's got a number associated with it is a Fibonacci level. They're automatically drawn when I draw fibs. For most drawing tools, most charting programs out there have Fibonacci in them. So not all, and that's okay. But if we look, I drew my Fibonacci from that swing high to that swing low right there. And then we bounced. Okay, beautiful, right? And then every line is a support and or a resistance. Look at this day. We used it as support. We used it as resistance. We opened up at resistance. We closed at support. We opened up at support, actually a little bit higher, and closed at support. We played with support, played with it, gap down to this line, then again. And look how many days we played on that line. Used it as a resistance. We failed. Oh, we go right to the next one, 2 days in a row, then back up again. See how important those levels are? It's harmonic, folks. You know those levels exist without knowing they exist. Mentally, in the back of your brain sees it. You may not fully understand why, but your brain recognizes the comfort of a pattern, that recognizable pattern. That when I say recognizable, your brain sees it. You know, where they say we only use, maybe 10% of our brain power. It's the other 90% that's seeing it that you don't know how to get at, to decipher inside of there. So when you have that happen, when that line, the moving average is very close to that fib level, we give that a rank, and that would be a rank of 1. So if I have a bearish bias, true bear, where they're all in the right order, the moving averages, and a rank of 1, what does that rank of 1 tell us? We have the moving average, either the 8 or 21, are near the fib line, and our price is near it as well. That rank of 1 are the most important trade setups for me today. Those are the ones that I am looking for. Whatever has a bullish rank, a bullish bias with a rank of 1 or a bearish bias with a rank of 1 are the most important stocks on my chart today. Right? So where are we now? Let's see. Well, let me do this right. Let me give you a hard fast rule here. I'm going to draw some additional lines in here. Actually, let's do this first. Let me pull this out so it's not in our way. We don't start drawing over it. And perfect. I'm going to get rid of this line up in here. I don't need it. Going to get rid of this line here. They have different purposes for them, but for this example, we don't need it. All right. So you'll notice it says 0.75, right? Basically, what I did is I've taken 25% of the difference of those two lines, the two Fibonacci levels. And as long as the moving average is within that distance from its resistance here, we get a rank of 1. If it's more than that from there, we get a rank of 2. Near it, but it's away, it's a rank of 2, right? If we, let's see, if we closed right here in the middle of 2 of our Fibonacci levels, that's a rank of 3. If we close near a fib line, but the moving average isn't there, that's a rank of 2. So 1 says the Fibonacci and the moving average are in the same location. 2 says we close near a fib line, but no moving average. 3 tells us we're in the middle of God's country. There's nothing there at all. We're right in the middle somewhere. It's nothing. When I look at my chart tomorrow, if the S&P 500 is bullish, well, actually right now bearish, right? So if the S&P is bearish, then I'm looking for bearish candidates for tomorrow. If I find Adobe and I find that Adobe is sitting in a bearish bias with a rank of 1, that's one of the top stocks I'm going to be looking at for the next trading day. And this is, again, assuming we're at a closing position right now at the end of the day. We're looking at this when the market is closed. Could you make the same analysis while the market's open? Absolutely, but not at 12:47 in the afternoon. I'm going to look to do this in the morning sometime, when I've got a full day ahead of me as potential trading. You're going to see the biggest, swiftest moves take place, period, the end, on a regular basis between that first, open of the day, 9:30 Eastern until 10:30, 11. That's when most of your move takes place. You'll get a low for lunch. You'll come back at 1:30, 1:45, maybe even 2 o'clock. You'll go to 2:30, 2:45, sometimes 3, and then you'll start to die off. Now, you may get some push into the end of the day. Could be short coverings and things like that. But overall, those are your bigger time frames as far as when we're looking at, right? What those time frames represent. So I would be looking at this as a bearish entry tomorrow. What would I want to have happen? Retest the fib line and fail, and I'll take the trade. And all the way down there, that's what I'm looking for. That's my support. That's the level I'm looking for my next target. All right, so I like Adobe a lot. I would put a check mark next to Adobe, and that one is now saved for me to look at later. If I look at AMD, I've got to drag my fibs out a little bit. So we're not really near the 8 moving average is right on a fib line, but we're in the middle of nowhere. So yeah, I'm going to say no to AMD. Amazing Amazon. It's in the middle. What rank is it? 3. So 3 is not for me. This puts us in the middle of our moving averages. You could take intraday trades potentially, but for today's focus, just forget about those. You're looking for the bullish bias where the stock is above the highest moving average, or the bearish bias where the stock's below the lowest moving average. If you find those are the best trades for anybody, including a newer trader. The ones that are kind of in between in this case, the pink and the brown line, the ones that fall between there, leave those for someone a little more experienced. At least for today. Get the experience first for yourself. And that's fine. Trade a little bit. Get to understand them. Then by all means, jump in. But right now, no bueno. So this has been Broadcom, been a very ugly stock. I love a Broadcom. Man. But this up and down, this mess, we can't make a decision, a higher high, a lower low. lower highs, lower lows. It's just, higher low, lower low. It's just, we're all over the place. Let's go find something that's got some consistency to it. We're in a neutral bias there. It's okay. All right. So if we close right where we are now, let me ask you, what would the bias be? Give you a second for it. Look at what we just talked about, the rules of engagement we talked about. What would that bias be? Is it bearish or is it bullish? Is it a true bear or a true bull? Or just bearish or bullish? Well, first off, it's bearish, right? So you got that part right. Next, it is a true bear because all the moving averages, they're in the right order. What's the right order? The shortest time frame is closest to price. That's 8. The one right above it is green, is 21, and the one above that is 55, is brown. So it's the perfect order. What rank are we in? Look at it. How close are we to the fib line with our moving average? Well, if we grab our drawing tool in here, are we less than 25% away? I'm not going to bother with the other two lines for now. We are. So there you go. Problem solved. We are at a rank of 1. So I like this one a lot. But Rob, it's been very bullish for the last 3 days. We want to trade it bearish. Well, that's the only way I'll take it, is taking the bearish side of it. We're at a major resistance point. We're looking at a potential rollover. The market is trading down right now. Why do I want to trade against the overall market? Let's just trade the downside of the market. What if it pops tomorrow? Then I don't take this trade. That's okay. I'll pass. But from the setup standpoint, that's what we're looking for right there. That's exactly what we want to see. And we can go through chart after chart after chart. I'll hit the space bar, and it gives me a little check mark there on CrowdStrike. Let's go look at Carvana. Moving average, a little far away. I don't like moving average as a support or resistance. I like it as a confirmation. I like the stock to be near the fib line. And if the moving average is there, it's kind of the, me too. I'm here. I want to play. Right? So it's not one that I would normally say, let's go take a trade. It's kind of in the middle. We'll pass. So we are above our highest moving average, which in this case is the 21, not the 8. So our moving averages are inverted. It's 21, 8, 55. We're kind of backwards. Can I take the trade? Yes, but aggressively. So instead of $1,000, maybe it's $400 or whatever numbers you want. You'll make that decision. You may look at that and say, I'm not doing anything that's got an aggressive. It's got the word aggressive in it. It's not for me. I'm not doing it. And that's okay. I think some of that, again, comes with experience. Let's keep going. Uglyville. We're between the moving averages, so nope. All right. Made a nice move down. But we're in the middle. There's nothing there, so no. And I know you look at these and go, but there's so many opportunities. I just want to trade. And you can, but find the right ones. So here we are with MasterCard. If this is where we close right now for the day, what would our bias be? Hopefully your answer was bearish. What would our rank be? 1. Bearish bias rank of 1, Katie bar the doors. All over it. I love it. That's my jam. That's my setup right there. Fall down, retest, drop, take the trade. Put my target just above the support. Put my stop just above my resistance line. Done. Done. It's as complicated and as simple as that. That's all there is to it. I like this one a lot. We're going to put a check mark there. And again, this is making the assumption that we were closed already today and we're looking for tomorrow. We're kind of in the middle here, so there's nothing I'm interested in there. In the middle. We're not in the middle of between moving averages, but we are in the middle of the chart. So what does that give us for a rank? Well, if it's moving average and fib line together close, that's a 1. If the stock is just by the fib line, that's a 2. So when the stock is in the middle of the 2 levels, that's a 3. 3, not for me. Bearish neutral, we're above the moving average, but not in a bearish bias. If it drops tomorrow, maybe, but right now we're going to say no. SPY, man, so ugly. All right, we're back in neutral again, so there's really nothing there. Just wanted to see the whole fib. And then Tesla. Older fib. So today's move has already happened, right? We broke down, big move today. It's down almost $13 right now. We'll see if it can hold that 400 level or not, but it isn't looking great, right? And when you look at it, bottom line is this. Look at the chart on the S&P. Determine bullish or bearish. If you could determine one of those, pick that as your direction of what you're looking to trade this day. If you can't determine one of those directions, then it might be better suited to stay away from the market, since 70 to 80% of all stocks tend to move with the S&P 500. Trade the direction of the S&P. Don't trade against it, right? You will do yourself an injustice, a disservice, by trying to trade against the market as a newer trader. If you are more experienced, that's a different rule set for you. If you've got the experience on how to trade that, there's nothing wrong with trading it. I trade it all the time. I'm doing this since 1997. I've got a little bit of experience behind me of this, okay? And if your moving averages align with the fib line and the price is in the right location and the moving averages are all aligned and you've got a bullish or a bearish bias and you get that bounce, to me, it's a no-brainer as a potential trade. Now, do you have to do a lot? Well, is it hard to do just one? You don't have to go after the most expensive stocks. Forget about booking at $4,000 or $5,000. Forget about Lilly and Costco near $1,000. Forget those. What if you did a Ford? What if you did a GameStop? What if you did Home Depot, a few $100s, right? Netflix under $100, 75, 72, whatever it is right now, right? That's what matters, is that right there. So with that, everyone, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. I will see you all next week at our next update. You have a great rest of your day. Take care, folks. Bye.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.